Good day, and welcome to the Ballantyne Strong second quarter 2015 conference call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on a touch-tone phone. To withdraw your question, please press star, then 2. Please note, this event is being recorded. I would now like to turn the conference over to Elise Desc. Please go ahead, Elise.
Good morning, everyone, and welcome to today's second quarter 2015 conference call. Today's call and webcast may contain forward-looking statements related to the company's future operating results. Except for historical information, it may include forward-looking statements that involve risks and uncertainties, including but not limited to quarterly fluctuations in results, customer demand for company's products, the development of new technology for alternate means of motion picture presentation, domestic and international economic conditions, the management of growth, and other risks detailed from time to time in the company's SEC filings. Actual results may differ materially from management's expectations. Joining us on today's call this morning is Kyle Cerminara, Chairman of the Board of Directors, Chris Stark, President, and Nate Legband, Chief Financial Officer. At this time, I would like to turn the call over to Kyle.
Thanks, Elise. Good morning, and thank you for joining us. The Ballantyne Board and Executive Team is pleased with the progress made during the second quarter. The new Board of Directors has invested a great deal of time and energy working closely with the management team to begin our progress of prudently evaluating each of our businesses and implementing strategies that will drive improvements in our financial performance. Since the election of the new Board of Directors in May, several strategies have been implemented to reduce our expense structure and increase profitability. These initial changes will enable us to begin leveraging our capital and to further invest and strengthen our focus on our Ballantyne, Strong, MDI, and Convergent businesses. We're committed to the success and growth of each of these businesses and see each of them as strategically important to our future. The Board and I look forward to the continued progress we believe we can achieve in the coming quarters. With that, I'd like to turn it over to Chris to shed more light on the second quarter.
Thank you, Kyle. As Kyle mentioned, the management team has recently begun implementing several strategies to improve our profitability. During the second quarter, the Omaha offices were consolidated to reduce our facility costs with an estimated savings of $1.6 million over the remainder of the lease. We also began reevaluating our organizational structure, and as a result, a number of staffing adjustments have been made, reducing personnel-related expenses. While these changes provide a good start toward improving the financial performance of the company, additional strategies and actions will be implemented in the coming months to drive further value. The management team will continue to work closely with the Board in developing an appropriate capital allocation policy while determining where investments should be made in our existing businesses to drive organic growth, as well as identifying non-strategic areas where expenses can be more effectively managed. Aside from some of the charges we recognize that were associated with the cost reduction initiatives and inventory valuation adjustments, the second quarter performance was down only slightly in comparison to the prior quarter, due in large part to fewer projector sales. All other product lines showed top-line improvement over the prior quarter. I would now like to turn the call over to Nate for additional color on the company's Q2 financial results.
Thanks, Chris, and good morning, everyone. Our total net revenues in the second quarter of 2015 were $19.7 million compared with $22 million in the same period of last year. The Managed Services segment generated revenues of $7.8 million in the second quarter compared with $7.6 million in the same period of the prior year. The increase is primarily attributable to increased project revenues in the digital media business. The Systems Integration segment generated revenues of $12.2 million in the second quarter compared with $14.8 million in the same period of the prior year. The primary driver of the decline was lower shipments of digital projectors. We shipped a total of 83 digital projectors in the second quarter compared with 144 in the same period of last year. This decline was partially offset by strong sales of our screens. Gross profit was $3.7 million compared with $4.2 million in the prior year. Our gross margin of 18.6% in the second quarter compared with 19.3% in the same quarter of the prior year. The decrease in gross margin as a percentage of revenue was driven by a charge of $1 million related to the valuation of inventory. This decrease was partially offset by a more favorable mix in our sales to higher margin products. Selling and administrative expenses were $5.5 million compared with $4.4 million in the prior year. The increase in SG&A when compared to the same quarter of the prior year was primarily attributable to an increase in severance and proxy contest-related expenses. We recorded $693,000 of severance costs during the quarter as part of the cost reduction initiatives. We also recorded a charge in a loss on disposal of assets of $426,000 related to the Omaha facility consolidation that took place in the second quarter. The facility consolidation was also part of broader cost reduction initiative. We generated a net loss of $2.9 million or 21 cents per share in the second quarter of 2015 compared with net income of $381,000 or 3 cents per share in the same period a year ago. Excluding charges related to severance, facility consolidation, inventory valuation, and the proxy contest, we generated a net loss of $473,000 or 4 cents per share in the second quarter of 2015. Ballantyne's cash and cash equivalents balance was $24.7 million as of June 30th, 2015, up from $23.9 million at the end of the prior quarter and $22.5 million at the end of the prior year. The increase compared to the prior quarter was primarily attributable due to strong cash flows from our systems integration business. We continue to have good liquidity and strong cash flows, providing additional capital resources for the future. At this point, we'd like to open the lines to answer your questions. Operator, please open the lines.
Thank you. We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the key. If at any time your question has been addressed and you would like to withdraw your question, please press star, then 2. At this time, we will pause momentarily to assemble our roster. Again, if you have any questions, please press star, then 1. At this time, I am seeing no further questions, so I would like to turn the call back over to Mr. Stark for any closing remarks.
Thank you for joining us this morning. We look forward to speaking with you next quarter to provide additional color on the strategies and performance initiatives in play to enhance the services and products provided to our customers while generating value add to our shareholders.
Thank you, Mr. Stark. The conference is now concluded. Thank you for attending today's presentation. You may now disconnect. Have a great day.